Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Marty, good morning. How we doing in YouTube? We have, again, a lot to talk about today. Seems that's like almost every day, but that's trading. Okay, great. Thanks, Rich. Well, everybody, thanks for coming today. Thanks for visiting Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process that you see here every day. Also, there is a number of these streams are available in YouTube. If you search Bookmap Tom B, you'll come across a number years worth of these. And one of the things you'll see, while the market is always random, one moment, guys, you're going to see a consistent process. And that's something I believe can be learned, replicated. And this stream is all about understanding market mechanics. And in other words, how does the market work? Why does it do what it does? How can you get in alignment with it? And what is the business of trading versus the fantasy that we all have when we first come into the business? That's what the stream's about. And that's what the Trader Lab community is about, is leveraging the collective experience of the participants in order to collectively do better. Nobody has a monopoly on being a phenomenal trader. Being a trader is a difficult path to take. One moment. Having a little technical challenge here, guys. I'm going to try to do okay. General disclosure, all Bookmap Ltd material and presentations are for educational purposes only. Yeah, I'm having some problems, guys. One moment. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Can I please get a screen and audio check? It's still good, Marty. How we doing in YouTube? Is YouTube okay? Because I'm having some technical issues here, guys. I just want to make sure that we're good. All right, let's go. Let's, as they say, go north. Now, this is the higher time frame. This is Investor RT. It is my thanks, Nick. My higher time frame software. I've been using it, I think, since 2009, maybe sooner. I can't remember. Isn't that something? It is a high tier tool and is especially good for someone who does the auction market theory volume profile. It was and probably still is, and it has been, as far as I know, the premier product for this approach to the market. Plus, it does everything else. You know, it does that and everything else. And the other thing about it, just so you know, is it exports the data to Bookmap. So I don't have to put my levels in. They're automatic and they get updated in real time. So it's very cool. So this is our, now let's go back. This was our target. So let me go a little further back. Trend day up, sell stops under here. target here. So we hit our target. We come up here, we check our target. It's too high. We come down, we take the stops out there, we take some stops out here, we put it in excess low. That sets up a long day before yesterday up to our next target, which we hit on the button. Who knew? Then we closed day before yesterday in here. That suggested this level was too high. This is how the auction works. Well, if this might be too high, it sets up the potential to come back here, take out the stops from these guys, and maybe take out the stops from those guys. So yesterday's plan was shorts, right? And then if we get under here, the next target was here. And that's all in yesterday's stream. Now, here's the joy of trading. Let's look. This is yesterday. Let's keep going. So we got the stops. This is the target I discussed in the stream. And then we get a squeeze. Trading. So we get the squeeze. And we come back into this range, back to what's called balance. In this consolidation, this is the highest volume. And let's look up here. Highest volume. If the price is too high, we can come back to the other side. The purpose of the market is to find out what's too high, what's too low, and what's fair. That's retail. That's based on volume. That's what the volume profile or auction market theory is about. So this was a surprise. And for me, I was staying mostly on the short side all day yesterday. So it was a good morning for me. And then I was still trading shorts. But what was happening to me was I was trading what's called mean reversion. So it's just trading short rotations. So that was okay. But the market started reversing. I did not participate in the longs. I just said, okay, I'm done with the shorts and no longs. And then we came back here. Now, coming in today, I'm going, well, we got shorts in here, and potentially we're going to take out yesterday's high and squeeze and maybe get up here. And so I had my plan laid out for longs because I looked at this and I said, well, this is another excess low. So we've returned inside the consolidation, and now the potential is to do some squeezing. So that was the plan. So anyway, that's the plan. However, what did we get? This. Initiative selling, take out. Actually, hold on a second. Let me make sure I got this right. Oh, nope. Got the wrong chart up here. We got our selling on the open, and where did we go? 88.5. That was the target, and these levels have been on the chart since we were up here. So I just want you to know, this is how the auction works. Now, the joy, of course, of trading is the rotations are random, and that is very difficult for us because we're all in this idea that we can predict what's going to happen. And, of course, if you can, come to Trader Lab, help us out with that. But in the meantime, the business of trading is not being in the prediction business. I think it's more like being in the maybe business. Maybe it'll do this, maybe it'll do that, maybe it won't do anything. So, now let's come to Bookmap. And now what was interesting, what I was I was kind of surprised actually, because I was looking at the ETH and I'm kind of getting myself all lined up, for getting long. And then in the ETH, I noticed the market starts and the volume. This is the what's called volume point of control in the ETH. It's where the highest volume is. So that's kind of like your fair price. And the market auctions or rotates in all time frames and fractals. So when we're sitting up here, I'm saying, yeah, we got a taper down here. The buyers are, coming for it. The retail price is here. And that's what led me to think longs. However, so I'm sitting here and I'm, planning my trade, and it's all about trade plan. And I'm mentally getting prepared to engage, looking for the long side. And I'm looking here, and I see selling come in. Now, I didn't see any news. I didn't see anything. And I see the selling, and this is pretty aggressive selling. And this is before the RTH open. And of course, just like you, I'm going, what's going on? What is going on? So I see this selling, and again, I was thinking, is there, all of a sudden it changed very dramatically. And I don't know, like I say, there was no news coming out. I don't know what happened. So I'm going, I don't know. But here's what I do know. If this is the retail price at the time in the ETH, and then I come into the RTH open, and the developing point of control in the ETH shifts lower. Let's talk auction. This is the language of the market. So I don't use indicators. So what I have to do is I actually have to look at what's going on here, not something else, somewhere else on my chart. And here's what I see. So, and over here, I have no clue. We're up at the ETH high, and because it's a statistic for us and a target if we were looking for longs, and I'm thinking, gee, I wish this thing would be further away. It's going to be my first target, and then I was going to go, north. But here's what happens. Liquidity comes in the book, and I see my selling. Now, that's aggressive selling. You'll notice it's a lot different than just the noise. It's change. Now, and the other piece, overnight volume point of control and settlement. All of a sudden, I'm coming down, going into the open. So that has me rather disturbed, because now all of a sudden now my plan is being invalidated and I have to change. So let's look. Here's the retail price. Let's remember that from the ETH. It's the last auction. What else is there? 38. Can I show this to you? 38 is the retail price, the high volume in this area. So I know 38, we can come up and kiss 38. This is for all you lovers out there. And if it's too high, we can reject it. And then where's the next level? 88. So I'm thinking 38 to 88. That's my plan. Not initially, because I'm looking for this, but I open under 38. That's, as they say, the canary in the coal mine, because that now becomes my resistance. $36.50, I think it was, actually, not 38. Where is it? Well, this one's 38. This is 37. It's the area. I don't know why this is over here. Don't shoot me. So, RTH open. Let's watch. Now, based on the condition of the market, I'm looking for a short. Now, getting into a short here is not easy. So this is right here, the RTH open. So this is VPOC. This is migration. I call this VPOC migration. I made these terms up, and I did webinars specifically on this process so that traders could understand a language. In the auction or in trading itself, the purpose of the market is to figure out what's too high, what's too low, and what's just right. Fair, retail. Well, if the current high volume, and this is how shopping works, you go to a store, you pay retail. It's all the same. Well, if the retail price becomes too high, the shoppers are going to leave the store. And now if the price gets lowered, so because the volume now is over here, then that sets up the possibility that this is too high. So what I'm seeing is the possibility, and that's all I'm going to say, possibility, because that's all you got. That's too high, and now this is the retail price. Now there's about an 82%-ish probability, past performance not necessarily indicative of future results, you got to vet the statistics, that we're going to get here and test this. And possibly over here. All these have good probabilities, and there's my key level. There's a confluence of levels based on the auction. All these are high volume, and the market tends to go and check high volume. So let's look at the behavior and see if there's a trade here. VPOC migration. So what do we know? too high, and punt, because that's what you got. So let's look. If I get a sweep on the open, a sell sweep, it sets up the possibility of a counter rotation. Now, I'm going to take you into minutia or microstructure. Now, in Trader Lab, what I try to share is thinking or trading in fractals. Fractals are minutia, micro. This is like the electron microscope. When the market opens, now I'm opening below these key levels. When the market opens, I want to see, now remember, too high, right? I want to see what happens here. Do I rotate up and check this price because it's the last retail price? That would be reasonable, and even up here. Or because I'm seeing selling, do I get sellers coming out of the chute? So right here, I see this, and it's still aggressive selling, and I'm looking for a counter rotation. Let's look. Here's my level. I've got one here, and I've got one there. And this is called VPOC migration. It's an extremely aggressive trade, and it is not for part of the reason is you have no structure. You are leaning on the ETH and the speed of this thing. You have to really develop unconscious competence. And if developing traders are going to try to trade this, I want you to introduce yourself to FOMO, because most developing traders, depending on how long they've been at it, do not have an edge here. If anything, it's a liability. And I would suggest that you concentrate on learning to read it and anticipate it, but don't trade it. Vet it. We have 3 types of trade plans in the Trader Lab, and they kind of fit inside each other. One is a higher time frame process, the other, which is directional, and the other one's a mean reversion, which is rotational, which is currently the condition of the market from where we are at the moment. And then there is the open, and the open's a separate plan. So those are isolated processes. So this is too high. I call it a variable high volume node. I made the terms up. What do I know? Don't know. So when I started doing this, nobody was doing it. So you create terminology. And this is too high. So I have a sweep here. This suggests counter rotation. So I'm using order flow, and I'm using the volume profile. So let's look. So my areas to get short are going to be there, and I risk getting squeezed out. The opening swing is here. So subject to your plan, you might not take a short here. Resistance is here. Remember that. Now let's see if we get a short. This is a trade location. Now, we're only going on 30 seconds, all right? There was my sweep. There's my rotation. So this suggested don't get short until you get the rotation. You can learn this in Trader Lab. Now, do we take this out? That is the great unknown. So let's look at the microstructure. This is microstructure. It is too high. Right there. I don't know it's too high until hindsight. So let's just stay real. The high volume in this structure is right here. I'm going to put a little line on it, and I'm going to draw a little box around it so you can see how this might work. And I only do this to help you guys see the structure in the auction. It just makes it easier. Let's talk about what this actually is. Sellers are here. There's your iceberg. You got your liquidity. Who knows? And your buyers are right here. So it's an auction. I'm buying. They're selling. Who wins? Think of it like a little shootout. Also, if you like, think of it like a store. An auction or a consolidation is a pause where the buyers and sellers interact. The high volume is here. That acts the same as this. This is for the entire session, the yellow line. This is only what's happening here, but it's fractal. So if you understand what's happening in different time frames as you think of them. And for me, there's no time frame in the developing time frame. It is whatever it takes, 1 second, 3 seconds, 30 seconds. How long does it take to complete this auction? So it's not time-based. There's the trigger. Here's the test. If you took a short here, you're leaning against that, and your stop has to be above this high. And then you are willing to take a stop, because if you're not willing to take a stop, you cannot participate. Let's watch. VPOC migration. Let's label this one. Now, let's look at our probabilities now, statistics, and you got to vet these for yourself. There's over a 90% probability that we take out either the ETH high or low. I'd say, given the way things are working here, we're going for this. So this was an initial target for this. Then it's hold. Now, 6100's a key location, and it should be labeled somewhere over here. Actually, 6120 was important, and 6100, I think it's labeled here someplace. Yeah, this. Yesterday's low, okay? So stops are under here. So for me, based on everything, I'm going for that. So let's see how it plays. And there's a number of trades in here, by the way. It isn't just one and done. There are many different ways to participate. So VPOC migration, target, scale, too high. Now, what else is happening here? Right here is, let me just make sure everything is working right here. Okay. This is called a low volume node. It is an outside edge of a distribution. And we need to be looking at this, okay? So the way this works is, if this is too high and this is too low, we rotate in it. And that's where the high volume is. If we fall away from it, then we start a new distribution. And all it is what's too high, what's too low. Think of this as a store. Well, if the pricing right now is too high over here, we're going to leave it. And now we start the process again. If this becomes too low, we can come back and check that. If that's still too high and this becomes too high, we can leave this and continue on our merry way. Let's watch. And this is Trader Lab trading. This is structured trading. You could learn this. Not saying you want to. I'm not even saying you need to. But I'm going to suggest to you, why wouldn't you? What's too high? Anybody see anything interesting here? What is that? Let's come back to the store here and see if this price is really too high. This is the new retail price. I'm not paying that. Oh, yeah? I guess not. What does that give you? How about a short? If it's vetted and part of your plan in the Trader Lab. Let's watch. Let's look at the microstructure, guys. Too high, rotation, retail, rotate, VWAP mid, not my primary concern. This is the auction, not a line on a chart. We break. So what is this setup? Let's come back to the microstructure. That is too high. Resistance. There. Do I know? Nope. What do I see here? Let's look. Buyers, resistance, no clue, right there. No way to know. Wish I did. Not in the business of knowing. I'm in the business of knowing I don't know. So what happens right here? Volume. What's it in alignment with? Developing time frame. This is a fractal. I'm going to draw another little box around it for you, just so you can see structure. These are triggers. You can learn this in Trader Lab because it's pieces. So if this is too high and I get a trigger, then I can lean against this with a stop out here, 3 ticks, for south of the border. Let's see. Watch. Short. You see it? And you guys track it. This is Trader Lab. Yeah, Gobekli, this process works on all markets. This is the basis of how markets work. You can take this process, trade anything that has liquidity. You know, palladium, maybe not so much, but anything that has volume in it, so it has depth. And it doesn't matter what it is, as long as, you know, there's volume so you can kind of see the distribution of behavior. You need an active market. So this works on 6E. In fact, we have traders in Trader Lab. CMJ, I think, is one of them, who trades the 6E, has a good time with it. And there's a lot of traders that trade many diverse markets in Trader Lab. In Trader Lab, we focus primarily on ES because of its depth. And it's just really a matter of consistency, because I'm always narrating a market and I want traders to see how it unfolds in all time frames or fractals, whether you're a high time frame trader, a swing trader, an option trader, or whether you're trading day trading. It's all the same. And a tutorial on a configuration, well, Norberto, go to bookmap.com. There's a link in the bottom of YouTube there, and you can kind of see what this is. This is Bookmap. It's a high tier order flow tool. The higher time frame charts are Investor RT. So this sets up a short. This is, so what do we have here? We have short, short. Watch, see? So there's two shorts at least. Potential target here. This is a level from yesterday. That was material. It was another scale. Let's just watch. VPOC migration. Do you see something familiar? Now, there's more. I'm going to try to speed along here. If you have questions, please post them. I'm going to try. Because now, what is still happening here? We have what's called a double distribution. Now, let's forget the terminology. What is it? I'm not paying that. I'm out of here. Let's check this out. So once we start rotating in here, it sets up a condition. The condition, if we, now let's maybe agree the trend is down. Anybody take exception with that? The trend might be up right now. So if we think the trend is down, and if you're in Trader Lab, you have a plan for a downtrend, but how do you participate in a trend, especially if the train's left the station and you're not on it? Now it's FOMO and thrashing, and I got to get in, and look what I could have had. That voice, by the way, is, I call it hide. And that's the self-talk. You know, when in hindsight, you know, I should have taken this, I coulda, I shoulda, I woulda, but I didn't, or I wasn't sure, and right. Well, nobody's sure, and everybody has regrets because we're human. The other part of that is that the critical self, the voice in your head, is not your friend in this business. It's great out, you know, out on the tundra when you're running around out on the planet. When you step onto the trading world, you're no longer on Earth. You are in a whole different place. So this is the current price. This is a double distribution. How do we trade this? Remember I said there's three processes: directional move, trend. There's what's called mean reversion or rotational trading, and then there's the open. Once we're in a downtrend, how do you participate? It's called outside in trading, and it's mean reversion. What is the mean? This is the mean. That's the fair price. So what the market tends to do, and I say tends because we don't know if, when, how, is come outside, squeeze, counter rotate, and then what we want to do, if it's part of our plan and we have an edge, is sell it to come back here and then maybe fall out the bottom, but one step at a time. So let's look. Where do we come? Let's look. This is too high. What do we got here? Mid, VWAP, and this is the key for me. not the mid, not the VWAP, the outside edge, the low volume node. Let me open this up. I'm going to show you where it is. We have 131 right here. So that's a low volume node. I'm going to mark it. And remember, in trading and in horseshoes and hand grenades, there is no precision. So I know that if I come outside somewhere, and I don't know where that'll be, I'm going to be looking for exhaustion. This is where order flow comes in, and absorption. So exhaustion, absorption, icebergs, everything but the kitchen sink, and a trigger to come back there. So that's my trade. Okay? So remember what I know. Now I have a new retail price, and that's too high. How does this market tend to work? Now, right here, I'm looking out here because I'm trading mean reversion. I'm now in a plan inside a plan. And these get posted in Trader Lab. And doesn't mean, anything. So, what do we know? Let's come back. Outside edge. What else do we know? Our sellers are in control here and aggressive. What do we know over here? We got the VWAP in the mid. Now remember, for me, now we have a structured trade in the Trader Lab, and this is a good short. Why? We have a structured trade called VWAP or mid, same difference, to VPOC, structured trade. But what else do we have? Outside edge. So here I have a confluence of elements. I have what's too high, and this is retail. So if I come outside to an area, remember, no precision, this is trading, right? And watch, I get a trigger, I can get short. Where's the trigger? It's right here. Let's look at the trigger. And if you have questions, again, post them. Now remember, there is no certainty and there is no precision. And I understand we all want precision. We want certainty, and it doesn't exist. How do you deal with that? You got to understand the business you're in, and you got to learn how to manage your emotional state and your need to avoid risk and pain. We're wired for that. It is the biggest problem you'll ever deal with, I think, in this business. It was for me, and it is for everybody else I know, because it's underestimated as far as what it'll take you out of the business. I believe if you come to Trader Lag, it's a personal belief that you can learn how to trade. You have to put the work in, and you can learn it if you persist and you go through a learning curve. And it's not 3 months and it's plug and play. Forget it. Not the way the real world is. It's nice in our fantasies, not the way it is. So this is the trigger. So then the thing about the trading is that we are guided, and I like to talk about the psychology because nobody talks about it. Everybody's talking about setups. And as retail traders, we want that thing. We want this setup. Well, that's not the problem. The problem is ourselves. This is a short, leaning against this. So you could take the short here, stop is 3 ticks over here. You're trying to go here for the scale and then hold. So let's look. And let's look. Stop is 3 ticks above here. You are not taken out. And this sets up another short right here. What you had here was exhaustion, icebergs. We get our buyers up here. Why didn't the market go up? Because there's a passive side, the sellers. So you get 65 stops. This is why I don't put my stop here. Because I've been picked off so many times, I've lost count. And I always thought about, how we always think we're a victim. They went for my stop. No, they didn't. How about your stop's in the wrong place? Have you ever thought about that? So why would you put your stop away from this? Because of that. And what's the other part? Why would we want to be a little away from this? Because there's going to be stops here. We know that, right? And what else do we know? If this price is too high, these sellers may activate again up here. So that's why I have my stop 3 ticks away. And if I'm good at what I do, I'm going to keep my risk within about 3 points or less. So if I entered here, let's just say at 24 3/4 or 24 half, where's my stop? 26 3/4. Or do I have that right? 20, whatever this high is here, 3 ticks above it. So I think it's 26/4. So it would be 27. So 27, do I have this right? Yeah, about 3 points. Okay. So that's how that works. So now you're coming back here. So the shorts from there to there, from there to there to get risk neutral. And then you put your helmet on. Let's watch. Pull back here. Remember where resistance is. It's here. That's VWAP. South. Okay. These are Trader Lab trades. Now, there's more. So 6,100 was an important level. We were going for it yesterday, actually, and we just missed it. That was the low of the day. Down here. Also, there's stops here. This is a target now because there's stops. When there's stops, I call that fuel. So let's watch. So these shorts, this is kind of where we're trying to go. Now, let's look at some continuation trades. Now, what I do, and I'm not saying, this is just me. I'm not saying that there's I have no monopoly on what's the right thing to do. What you do in Trader Lab is you come to a community of serious traders. It's about the business of trading. And what you're going to find in Trader Lab is different traders are doing different things in different fractals and different time frames. I can be short, somebody else can be long, right? Some traders are only trading these kind of rotations. Others are putting a trade on and going to the gym. We have one trader in Trader Lab that actually vacuums while he has a trade on, which I find is pretty interesting. So let me see. The Stoic Troglodyte. You got to tell me what that's all about. That name, that username. You keep finding yourself counter trend trading. Any idea? Yeah. You got to stop yourself from counter trend trading. The way it works is trade plan. If you're counter trend trading, then you don't have a plan. You're responding to rotations and stimulus. The thing about a trade plan is it's all done outside of market hours. And basically what you do is you show up to work, if you will. Now we're going to be stimulated by all the, the adrenaline and the endorphins and dopamine and all this stuff that's going on. And it's going to hijack our brain into something else, into a lunatic. And a lot of us, depending how long we've been trading, think that, well, gee, it can't go any lower. They're going to squeeze the shorts. And we make decisions based on nothing. And it's FOMO based and it's generated. And it even gets stronger. If you didn't get the down move, you're going to find yourself wanting to take the opposite trades because it can't go any lower. And boy, all this. Well, it has nothing to do with what the market's going to do. What the market's going to do is auction. It's going to look for too low. And I can tell you, I have no idea where the low of the day is going to be. It's not my job. Now, the low of the day may be in. Still not my job. But in between, even if the low of the day is in, I have trades which are mean reversion trades. And that means rotational trading. So for me, now I'm still, holding on to this thing, but let's just assume I don't have a trade. And by the way, this thing about trying to pick a bottom and catch it and counter trend trade, if you have an edge for counter trend trading, by all means, but most traders do not. For developing traders, and by the way, I'm a developing trader. It doesn't matter. And we're all developing because we're all learning every day. We're all human. I see the shorts are still working pretty good here. We'll talk about those. So all these are continuation trades. In fact, I narrated this one in TraderLab. Matter of fact, I forget because I don't, What happened here? This is high volume. I'm just grabbing it out of left field. So this is chop, 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 break, test. This is a potential short right here. Actually, this is a short right here. I don't remember if I took this one. It is a short. It was very fast. And basically what you would be doing with this is you get the sweep, you get a sweep. This is off a report. You come up and what do you test? Micro high volume right here. See if this isn't familiar. And you get this. Now, where is resistance? It's right here. That's a short if you're a rotational trader. But let's come back here. This is more structured. When you get VPOC migration, I got to label this. I label these because we can come back and check them. And if we do, we can trade with them if it's in alignment. Let's see what's happening. I'm going to get this out of here because it's no longer relevant. And, whoop, that's not what I wanted to do. Let me try to get, well, seems like a lot of work, doesn't it? This is now a low volume node. You saw me do this higher up. I have the separation. What the separation is, this low volume node is like a dividing line between auctions. And it's important because it tells us that we're currently rejecting everything that's above. So if I rotate out, I can lean on this to come back around for a continuation trade. So that's all I'm doing. Now this sets up a continuation trade also. I'm leaning against this right here. The volume is there. We break, we test it there, we break, we test it here, we break. You see something going on here? That's interesting. Now here, these buyers are absorbed. Now, you would need always to have a trade management process. I don't spend too much time on that here because it's really a function of the time frame or fractal you trade. So, what I might do, you might not do. You might just be short and put your stop at the high of the day and go take a nap. In fact, we have a trader in TraderLab who basically will put his trades on and go to the gym. I don't know how he does it. When I was managing funds, I actually had a little portable, and this is way back. This is back in the, when was it? I think mid-1980s or so. And I would go to the restroom, and I had actually looked like a big calculator. And it was a wireless, like a radio that was a quote machine. And I would be watching, because I was a position trader and a swing trader. So how would you like to be doing that? Just a little fun fact. I forgot all about that. Okay, so resistance is here. Then we have our mid and our VWAP and our outside edge. So subject to your trade plan, when you see absorption and the buyers take over, so what we're looking at is buyers are here, sellers are in control. Micro high volume is here. The buyers come back, the sellers are in control. Here's the micro structure. I break low. Right here, the sellers are in control. There's the buyers are here, the sellers are here. I break low, sellers are under the buyers. This is resistance. Just pulling a little something out of the, just to give you something to think about. Sellers are here, sellers are there, sellers are there, buyers are here. Chop, chop, chop. It's an auction. If I break low, sellers are in control. Going to zero, right? Now what? Sellers are here, sellers are here, sellers are there. That's resistance, micro. I come up, as far as I know, this is my resistance right here, going lower, see you later, break high, change. I'm now above these guys. It's depending on how you manage or how you do your thing. It's an exit or whatever. For me, Hasta la vista. See you later. Looking for another location to get short again. Kind of what I do, rotational trading. I'm just saying it's just a thought, not saying you should do it. Where's my resistance? It's here. And where's my stops? Above here. You always got to look left. So I got resistance here. I got stops sitting here. I do not take the same location over and over again. What do they say? First time is the charm. Why? Because now there's buy stops sitting above these swings. And retail traders put their stops in the same place. I do not want to participate in their stops. I want to use their stops to look for exhaustion and at a location to get repositioned for the continuation trade. So for me, it's only shorts today. There's my location. I now have picked the stops, VPOC migration, and there's two possibilities. This, of course, or this. So I narrated this in Trader Lab as a potential short. Watch it. And where's my support? It's here because the buyers came here. So let's see what happens. I break under the buyers here. Now this gets a little more advanced. I break low. I test them from below. This is not really a structured trade. It's more behavioral. I'm now testing this. And if I can't get back in here, then if I fall out, I'm going south of the border, and I have 6,100 with resting liquidity. So subject to your plan, that's an add or nothing. Watch the behavior, 6,100 key location. For me, an add. Over 90% probability that we take out the first hour's low. And don't forget what our ultimate target is that we're shooting for is this right there. And it's on the chart. VPOC migration. So far, so good. Target was here. Out of the trade. Finito. Except for mean reversion trading. Now, VPOC migration. Let's label this. Do you guys have questions, by the way? I'm going to come up and look. I can't see your questions while I'm doing this, but I want you to understand something. This is every day. By every day, I mean this is a process. What happens is random. But once you understand process, I believe you can learn this. But it requires you to learn to speak a foreign language. Our indicators are translators, okay? And that's fine. Except they have no idea the condition of the market or why levels are important. That's just not what they do. So we're asking our indicators to solve for everything. They don't do that. They do some things, and we even have winning trades using the process because everybody has winning trades. It's not unique to anybody. The thing about it is, if you understand how the market works and you get close to how it works using order flow and understanding the actual market mechanics, you can then use that understanding to get time potentially, and because you got to vet this and make it your own, timely execution because you understand what's going on. I'm not waiting on an indicator. I'm the indicator. I am reading the language. And if you understand how to read the language, what does that do for you? Does that give you an edge over everybody else who's doing what you're doing? Does it tell you something? Why is the market going down here? You know that? There's a sweep here. What does that suggest? Lower. What happened over here? Icebergs. They're absorbing these buyers. Sellers take over. I come back and test the sellers. Sweep. Sellers take over. Order flow. What happens when I come back here? These sellers are still hitting it. Now they're taking over. Look, VPOC migration. Hasta la vista. Thanks for playing. Give you the coupon to the buffet. Watch. Now, if I come across here, then I have to go into mean reversion. Where's my outside edge? It's here and yesterday's low. So if I rotate up and I've got this guy in the book, we have to see what happens here. I'm looking for shorts to come back here. So that's called mean reversion. Let's see what happens. I don't remember. There's outside. Yesterday's low. And this gets funky. It's up in here. And then the idea is to come here. This is called mean reversion. So this is a potential short. Now look at this. I don't remember if he executed or if he pulled. Don't remember. He pulled. So basically, this guy was just in here for whatever reason. I can't even tell you. But he pulls. And then the icebergs are here. And let's talk about real estate. You've heard of this? Location, location, location. What's the location? Test yesterday's range, outside edge, micro high volume is there, too high, and now we have the bottom of this upper distribution here. It's like a dividing line. So this is the next short. It's right here. Let's look at it. Here's the trigger. Now, I'm going to open this up. I want to make it bigger because I know it gets kind of crowded here. Let me shrink this a little bit. You don't need to see that. And I think. Okay. So let's look at the trigger. Sweeps coming up. That is, remember, sweep, looking for downside rotation. Sweep, looking for downside rotation. So I've got my order flow part of this. I've got my buyers here going to the moon, except where am I? Outside edge. Yesterday's low. Location, location, location. Now, let's look at our pieces. Let's come back. And these are narrated at times in Trader Lab when I can. Buyers are here. So right here, right? But what happens here? Let's look at the minutia. Right here is micro structure. Again, I'm just doing this to help you see it. And what is it? It's an auction. Now, this is what this looks like. Too low, too high. It's a shopping experience. And the retail price is here. Now, the thing about it is, in this fractal or time frame, this is the outside edge, and this is the retail price. Follow with. In a microstructure or shorter time frame, this is the retail price. If we find too high here, then we can come back and visit this. It's all the same. If this is too high and we leave it, we have a trigger, then what's the most recent price in the next higher time frame or fractal? It's there. Too high, short, outside edge, called mean reversion. That's the mean. Hasta la vista. Thanks for playing. Back here. Scale. Then whatever. Now let's look at the structure. Chop, chop, chop is your auction. When you break here, this sets up your short. Now for me, if you learn to read order flow, and you can do that, like with every tool, you've got to learn what it says, and this is language, you would know here that this was absorbed because the sellers are now below the buyers, and my resistance is here. There's my icebergs. So right here, the buyers are here. The sellers are under these buyers. So what happens here is key. This is the whole key to it right here. Do the buyers who are here or not? And the seller now is below the buyer, who's below the buyer, and we had our sweep, which suggested this. So all these pieces come together in alignment for this, mean reversion. It's a little complicated. You can learn it. It's not complicated. It's only random. So let's watch now. Just keep watching. So with this one, you'd be risk neutral. If you took it here, you would take a stop. Let's watch. It's just the way it is. We have to get over it. And what we did is we squeezed these guys out, and all we did was come out a little further outside. It's the same trade again. So again, absorption, I see stacking in the book. I've got my icebergs again, selling, and I have a trigger here, this little high volume area. Now, right here, and they're still in this area, this zone. It's, remember, there's my seller, aggressive. I come back and test this, and my outside edge of this microstructure is here, and the volume is here. And we're trying to go here. I haven't seen any of this. Very nice. Still mean reversion. Look at this short here. Back to here. And then out the bottom. Now we're below this. That's amazing. Questions, guys? Thanks for your patience. Here's a sweep, potential counter rotation, not a recommendation. Let's see. When you see these sweeps, and this is a great tool in Bookmap, see the sweep, counter rotation. See the sweep? It doesn't mean get long. It just means manage your trade, and don't be surprised if we don't have a rotation. Now, the thing about it is we don't know where or anything. But what's pretty important about this whole thing? This. We're below it. Questions, guys? Please give a like if you're in YouTube. Glad I'm trying to remember if it, I think that's probably a modern one. Yeah, it looked like that. It had an antenna and the whole thing. But I can't remember. Yeah, Quotrek. It was a Quotrek. It was kind of expensive, too. Questions, guys? How are we doing in YouTube? Do I have any long trades? No. No long trades. Stoic, if you want to learn about triggers and Trader Lab and, you know, what this is all about, there's a library of webinars in the Trader Lab you can watch. Some of them up to 4, almost 5 hours long of real-time narration. And also, there's 60 PDFs you can download, and you'll see a lot of this behavior. When I put these together, and these are actual trades, live trades, you can see them, their target and all that. And it's a mixture of pieces. And this is put together, I don't even know when it was, 2021. There's just all kinds of stuff in here. Different structured trades. But to see setups, if you will, or triggers, you'll see them in here, but you really need to watch the previous streams and come to Trader Lab. This is where you can learn this stuff. And it's not a 15-minute experience. This is about business and trading. It takes a commitment to get educated and not to do what other retail traders do, because we know how they do and they don't do so good. So it's a matter of, if you've been doing this, you can take what you've learned. What I found for me was I kept waking up in the same place. I was trying to get my indicators and time frames to kind of meld and be consistent. What I didn't understand was I was always fitting my quote indicators to the past. So I was curve fitting, and under certain conditions, anything works. But over time, that process didn't work. So I called it Trader Groundhog Day, because I kept, you get kind of excited and you think, hey, this is much better. You start trading it, and under certain conditions, it works. Anything works, and maybe in a trend, some things work pretty good. But when most of the time we're not trending, we're not directional, we become rotational. And even if you catch a nice move, the rest of the day, you're going to end up giving it back, most of it back, all of it back, or ending up a loser because, and I mean you, I mean all of us, because we're trying to fit the market into a box of one size fits all. The market doesn't work that way. We're in a specific condition, downtrend, counter rotation, mean reversion trading, which means shorts only. Would I ever take a long? Not today. Not yet. And I may never take a long on a day like today. Because for me, when I see longs, they're trade management opportunities. So when I see a long trigger, I'm exiting. And I don't care if it goes on wherever it goes without me. It's not important to me. I got over that. You know, gee, I got out too early, or I could have got so much. You know what? That is the lunatic in your head talking. You know, we seek approval. We are human. We want to be smart. We want the pat on the back. And when you do something, whether or not it's intentional or otherwise, it's just the market. But now you look back and you say, and let's say you got out wherever you did because you followed a plan, or you don't have a plan, then shame on you. But let's just assume you follow your plan and then the market drops 20 points. Has that ever happened to you? It happens to all of us. Then what happens? There's a raving lunatic in control. I should have got this. Now you're looking for the next trade. I left all this on the table. Is that you? And I mean the collective you, not anybody individually. You see? It's all of us. The thing is, you got to learn what these primal behaviors are and how destructive they are to those who want to actually be in this business and create sustainability. It is a primal element, and it is based on our wiring, our reptilian brain, and all this stuff. So all this is always going under the hood. And I'm constantly reminding traders in Trader Lab that you got to be conscious. You got to take notes. That voice in your head is that noise, that chatter, that self-talk, that self-criticizing individual in your brain. You know, you shoulda, you coulda, why didn't you? Is that any of us? It's all of us. That will take you out of the business. And I believe anybody can learn to trade if they do the work and come to Trader Lab. Being able to trade is a whole different issue. And that is another element that we work on in Trader Lab. But it's going to potentially be the toughest thing to manage because that's where all of us are weak because of primal wiring. We are responding to what nature created for us, so we survived back in the tundra with the saber-toothed tiger, fight and flight, avoid risk. So that's why most retail traders go down a path of certainty and confirmation in an environment where it doesn't exist. So you're trying to to avoid the saber-toothed tiger, but you're not even conscious of the direction you've pointed yourself in relation to this business, which has nothing to do with this business. Avoiding risk is not what we do. We take risk in order to get paid. How can you avoid risk to take risk? It's illogical, but the rationalization is emotional. That makes sense. Yeah, Killatun's saying he's trying to get control of the lunatic. Yeah, we all are. And if you're not conscious of your weaknesses and you learn about yourself by journaling, I recommend to all traders in Trader Lab, and many are doing it, I hope everyone does it, that you record yourself. OBS software, it's free. You record your screen and you narrate the market. And of course, you'll have your trades. And then you must be narrating because the narration will help you not impulse. Because all of a sudden you see this and you're going to start clicking the mouse. Is that a structured trade? I don't think it is. Can it go down from here? Yeah. What's important about this? We're under this level. This is a big deal. Now, where does it go from here? So should you be selling this? Now, this is a selling trigger. Who's asking me about triggers? This is a microstructure. It is a trigger. This is a trigger. That is a trigger. Break, test, micro. These are not anything you should be doing anything with. I'm getting asked about triggers, but it's structure. So the thing about triggering is it's not the trade here. It's the trade at a location. So triggers, all they are is consolidations. So the consolidation is where both sides pause and they kind of fight a little bit about it. You know, this is a trigger right here. But it's not a trade. It's just a trigger. I hope that answers your question. Stoic? We also have another trade here I forgot to mention to you guys. It's a structured trade, and I think it's set up at the IB continuation trade. Trader Lab, did we have an IB continuation trade today? I think I was already short. I wasn't even conscious of it. Well, a consolidation by itself is just, but I use them when they're in alignment. So it's a priority of inputs. For me, the primary chassis that the trades are overlaid on is this, because it's a distribution of volume. Think about it this way. If the market is going up, or you go to the store, and let's say your tuna, which is $1 a can retail, is going for $2 up here. Well, what's going to happen? Less buyers at $2 a can, and you'll notice how the volume tapers off. That creates a low volume or outside edge. Less buyers. And how do we get more buyers? Well, if the buyers won't pay $2, then the market participants are going to lower the price to attract the buyers. And that's what creates rotations in the market in all time frames and fractals. So if we find too low, we'll rotate. And if we come too high and they won't pay it, we'll rotate. That's the basis of mean reversion. Now we're in a downtrend. So the only trades for me are counter rotations, get back in alignment, and get short. So that's it. So there's loads of opportunity today. I'm just looking over at my other monitor. That would have been nice. Oh yeah, sometimes this streaming makes me think I should reconsider. So this is another short. All these are shorts. And the reason is the volume is here. If I look at the language, this is too high. I get my sellers. If I come back and this is too high, I get my sellers. All this is just shorts. That's all you got going on here. Anything else? I don't see anything else. And what was this? Microstructure. There's a trigger. Now, it's not a trade I would take because I'm already would be short from up here. But let's assume, now let's talk about trade management. If you're using micro triggers for trade management, for example, sellers are here, buyers are here, sellers are under the buyers trigger. This is also a potential short. And I say potential because if it's not your trade, you don't have a trade. Break. Let's come back and see where we test. So too high, break, microstructure, break, test there, break, microstructure, break, test. By the way, why did this go down? Buyers are here, selling iceberg. That's limits. They're selling into this guy. He lifted. Thanks for playing. We'll see you later. Sellers below. Resistance. Resistance is here. There. Sellers are below the buyer, and the buyers there. Resistance under here. Resistance. Same place. See it? Triggers. Volume is here. Resistance. Break low. Resistance. Volume is here. Break low. Resistance. And you see the little node sitting there? That's resistance. Resistance. See it? Now, what else do we know? Let's come back here. Outside edge is here. Support could be there or there. Let's just watch. So now you have your shorts. You all know about that. So short, 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 right? Short, short, short. Resistance. And this is the structure we were just talking about. It's out here And this is potentially mean reversion. Now, this is very aggressive because of range. One of the requirements, in my opinion, is that you must have range. Otherwise, you can't get risk neutral. You can easily get squeezed out. Just saying. What's this? It's a trigger. What's that? Resistance. Just saying. What's important? Now here, this will throw you a little. What's that? Isn't that the target coming down in the highest volume in the area? What happens if we get below it, then we come back to it, and now that's too high? Doesn't that suggest maybe lower? Just ask them. What do you think? And let's look again at our higher time frame. This was the primary target. Remember how the market works. Too high? I'm not paying that. Get out of here. Yesterday, blow everybody out. Figure we're going up. Nah, fooled you. It was only a short squeeze. Then we open here. Hasta la vista. Come down here. If we get under here, it opens up targets below. And they should be on my chart. This one here, actually, too, is really a good one. Wherever this is. 72.5, maybe. And that's kind of an area here. There's stops under here. So if we get under here, where's the fuel? Under here. For me, and it's not a recommendation, this is my next target there. Whatever that is, 72-ish. And this is how the auction works. It's like, what's too high? What's too low? Now here, clueless. Back here, here. Oh, too high? Too high? Too high? Oh, next. Oh, too high? Maybe here. Why? Longs. Where's their stops? There. What's left? Well, I don't have to get here. But if you're long, what are you thinking about? That's TraderLab. And it's random. So we can't do anything about randomness. All we can do is have a plan to operate in it. Micro high volume structure is here, which might say too low. Now, all it sets up, if it's too low, and for me, doesn't set up a long. It sets up a counter rotation, and then it's trade management. I'm not done with shorts, but this rotation might be over. So I have to look at this, and I'm going, well, what happened here? Liquidity came in the book. Absorption. So the sellers got absorbed here. The buyers are here. The volume is here, and I'm above it. That suggests here. So out here. Let's just see what happens out here. It's not a, and this is where you would be trading. And if this was this is a fractal. The auction does not know the range. It just is behavior. So now when I come outside, I have to be thinking about where were the sellers last. They're out in here, this outside edge, okay? So what I'm going to do, and I'm not going to, this is not a trade recommendation. All I do is I go, okay, it could come here. That's it. And what happens when we get there? Because these are levels. There's nothing more to trading than levels. So this is the level. What's it going to do? Do I get selling over here? Do I get a break and a trigger, or do I keep pushing through? If I keep pushing through, then maybe there's no trade. Where's my last resistance? It's right here, right here. If I push through this, then I got to look a little higher, or I don't look anywhere. I just hang out. Let's watch the location. Not a trade recommendation. If the trade sets up, this is where we're going. That's it. That's all this is. And I don't know if you want to trade for a couple of points. That's your call, not mine. But here's the thing that's important in what you learn in TraderLab. You learn this. Now, here's the variable. It's not the auction. The auction is very consistent and random. What this is about is range. Do you have enough range to put this trade on to get risk neutral? So you're going for 72. That's our target. Is everybody with me? This is Trader Lab. How you guys doing? We all right? I'm getting a question. Is trying to track the IB low and IB highs a form of looking for certainty? I don't understand what you mean by tracking them. Why don't you clarify what you mean by that? And you're focusing A plus on the IBC, IBF to be more of a core concept than certainty, master. Yeah. How we doing in YouTube? Please give a like. Throw the thumb. It's almost like being in the Colosseum, the Roman Colosseum. You want to get a thumb up. The thumb down didn't have such a good outcome, right? I don't know if you guys have seen Gladiator. I figured that would have been a tough job. Trading is a performance endeavor. You got to be good to do this. You cannot be passive. You cannot be nonchalant. You're competing against the best minds on the planet. I've worked with guys, hedge fund guys, quants. I've been in the business 45 years. I've sat on trade desks, etc., fund manager, all that jazz. And I will tell you, most retail traders do not take this seriously. They're really just playing a game. And I say that with all humility because I'm sure many retail traders wish that they could do this and sustain a career in it. But what they don't seem to understand is they've got to really do something different than what other retail traders are doing. They need to learn to understand how the market works. It's not defined by an indicator. There's much more to it, but it's not complicated. It's just different. It's a different way to look at it. And I'm not saying you won't have winning trades with anything. In fact, you don't need an indicator. You don't need anything. You'll have winning trades. That's not the problem. The problem is you can have winning trades and still be a loser, right? And we've all had winning trades and we all lose money until we do something about it. That's just the facts. So part of what we do in Trader Lab is all that experience. I always think of it like you've been trading. Let's just say you've lost money. Welcome. Everybody loses money. So you've lost. Okay. Are you going to keep doing the same thing and think that it's going to change? Or can you this is trapped equity. Think of it like you're paying for an education and the dollars that are going out the window for this education randomly, right? But they're still going in the wrong direction. You're getting an education. The thing is, are you repeating the class over and over and over again, expecting a different outcome when you're using a process that maybe has no statistical validity or edge? We are in a random environment. And if you behave randomly in a random environment, you get chaos. You have nothing. You can't measure it. So if we understand the environment we're operating in, then we have to then anchor what we do. And in my primer webinar that I did, and it's available to all of you in the Bookmap Discord Trader Lab community, it's about an hour long. It's got over 31,000 views. It might be 32,000 by now. I don't know. But it talks about a higher level overview of understanding how the market works and the process, the business of trading. And if you think you've gone down dead ends, I went down more dead ends because I've had more time. Also, there was no information when I started. We didn't have an internet. We didn't have computers. Not a Zippo. You bought a book or you went to a seminar. And I can tell you, the books didn't teach me how to trade, and neither did the seminars. So, So It was a grind. And I spent years trying to fix something that I didn't understand because I didn't understand the business I was in. Nobody told me. And when I started trading, there were an awful lot of traders. So, and there was no day trading or any of that. I mean, the only way you would day trade, you pick up the phone, call your guy on the side of the pit, and they'd hand signal your order in and out, that kind of thing. So day traded didn't make sense. So I was a trend follower and a swing trader. Also, I traded options also, but that's different. And spreads, did a lot of spread trading. Somebody was talking about spreads in TraderLab the other day. I really enjoyed trading spreads and applying technical analysis to them. And they were really nice until they'd flip on you, in the middle of the night. So when I was trading currency spreads, and they weren't pairs like they are now, you'd be doing each one literally. So, CME, buy a yen, sell a D-mark, whatever it was, and then I would leg them, We don't need to talk about that here. But I'm just saying is I've kind of done a couple of different things over the years. And I also used to have every piece of information on my desktop. The VIX, the trend, up, down, advancing, declining, up volume, down volume. I don't even remember. Ticky. We all have done the same stuff. I don't have any of it now because what I found, and I'm only talking about me, was more creates conflict thrashing. And why do we have more? Because we're looking for certainty. Well, the desire to have certainty and develop confidence is a primal need that does not have anything to do with the business we're in. So we tend to go the opposite extreme. Load it in there. More creates more certainty, right? Confirmation. If the VIX is going up, do you think the VIX is going up today? Let me ask you, do you think I need to have the VIX on my quote here so I can see the VIX going up? What happens if for some reason the market's going down and I see the VIX go down a little bit? Does that mean it's a reversal? What does it mean? It means nothing. It's noise. So I have none of it. I don't look at anything else other than what I see right here because I don't need anything else because the truth of the market is happening right in front of me. So I found over time, and I think when I had CQG and the early CQG, I'm trying to remember, I don't remember when I first got it. It was in the early 1980s. It was called the TQ 2020. I think I had 32 symbols on it or something. I can't remember, but 32 kind of sticks in my mind. Everything but the kitchen sink. And now I'm at the opposite extreme. And my trading is certainly a heck of a lot better than it was back then because all I need to know is order flow, structure, who's in control, and stay aligned with the dominant side. That's all I need to do. And I take stops like you do. So welcome to trading. Where's our next target, right? Where the stops are. And where did that come from? This is all TraderLab. You would know this. This is the next target. It's right there, 72.5. Fuel is under here. Now, it doesn't mean we're going to get there, but if we get under here, then the next layer is going to be out here. Now, for me, just me, I don't know the high and low of anything. So it's not my skill, and I don't know who has the skill. We all get lucky. I think I've had more experiencing buy the high than selling the high. Any of you ever done that? We've all done it. So out here, now we can keep going, but if for me, and it's not a recommendation, when I get under here, if I do, I'm anticipating a bit of a snap back, maybe. So my trade could be done under here and I'm done for the day and, go to lunch. Just saying. Anyway, this is the next level. You guys have questions. This is trading the auction. This is not complicated. It's just random. Roy, I personally do not trade the NQ currently, but I was a big fan of the NQ. I used to trade it. Really, I traded it for a number of years. Uh, but we call it the snake because it's thin. And for developing traders, it's a tough market to operate in. Uh, Once a trader builds out their trade plan and has a statistical edge and overcomes their uh, emotional issues, then you can take this process and overlay it on any market, NQ or any, it doesn't matter really. Um, but for developing traders, the NQ is faster, it's thinner, it's harder to manage risk in it because you'll get skidded on your stops or whatever. So um, I don't trade it because I really want to help. My thing is helping developing traders actually learn the business and maybe have a career. The best way I can do that is help them work in a market that has depth, as it helps with the risk management. They're not going to get skidded. Also, there's enough rotations in this thing, and you can trade micros with it, so it's got a lot of things going. I know you can trade the micro NQ, but you're still going to, be in a Cuisinart in that thing. So I just stick with the ES for the stream and for the Trader Lab, and because I trade it myself, so it's fine. It doesn't matter. You could trade anything you want, but the idea of Trader Lab is to help traders build a business. So what is the best product for that? To me, ES is the best product for developing traders. I mean, we could also trade corn. That could work pretty well. But I think the ES is a little more interesting. You guys have further questions? Please give a like if you're in YouTube. Remember, these streams are available to Bookmap, Discord, Trader Lab participants to reverse engineer, review, make them your own, build out a trade plan. I'm going to show you what the Trader Lab is. It's a community of like-minded traders. You can see there's a lot going on in here. Charts, discussion, trades. Yeah, Quotron. I used to have one of those back when I was on a trade desk. Go to the restroom, take it with you. Fun times. I also had a quote machine next to my bed because I was trading currencies. I'm going to tell you that wasn't very popular with my significant other. That's kind of what you do when you're on the when you're working in the business. So still mean reversion. I took a short on the rotation back to yesterday's low. I'm scaled and mean reversion. So that's what I'm talking about. Mean reversion. That's outside in trading. So that's what it's been, other than the initial shorts coming out to shoot. So this is Trader Lab. You're all welcome. There's a lot going on here. It's global. Everybody's all over the place. There's action going on here and activity in the ETH. So there's a lot going on. Here's what the library of webinars looks like. And you can use the link in the bottom of YouTube. And you can watch all these. There's tons of them. And then going back a number of years, PDFs you can download of those 60 PDFs of structured trades I shared. Also, the community. And there is no cost for this. Some of the things you might want to take a look at. Why most traders using indicators fail. Are you trapped in trader Groundhog Day? That's where you work hard and wake up with the same outcome no matter what you do. Order flow, how to use it with the volume profile, how to trade high volatility reports, a lot of great stuff here. Advanced user session, also psychology. It's all available. If you're interested, use the link in the bottom of YouTube. I'm going to make this stream available. If you guys are interested, you can watch it over the weekend. Please give a like. And I look forward to seeing you guys on Monday. Have a super weekend. And thanks again for visiting the Trader Lab. I look forward to seeing you soon.